All right, first off, hit the mark trading. That's me. I'm Martin Rhymes. Thanks for everybody for being here. I'm the last speaker of the day. What they say, save the best for last. This is going to be real simple, not complicated. Nothing I do is complicated. So, thank you, Traders Talk Live. Your commitment to trader education is greatly appreciated. The charts I show are from Trade Navigator. I think it's important to mention that trading financial instruments using stocks, contracts, options is extremely risky. Only trade with money you can afford to place at risk, i.e. lose. Past results do not guarantee future results. Please consult a licensed professional prior to trading using real money. Now look, you need to paper trade before testing any new concept. You really need to paper trade it. Just a little bit about me. I've been trading for 25 plus years, 10 plus years full time. I launched a mentoring service, a newsletter in 2008. I moved that to nightly video and update format in 2013. I do total immersion intensive boot camps on trend and momentum trading, typically about 4 times a year. I'm doing one right now this week for position trading. We touch a little bit on day trading, but really the day trading, I've got a whole separate course for that. Everything I do works on stocks, options, bond futures, forex, whatever. I've got various indicators experience, spoken at numerous trading conferences, and provided lots of webinars for traders on the internet promoting relaxed, simplified trading. Now this is me, and this is my trading room at the house. All right. Before I start, let me just tell you, if you go to hitthemarktrading.com, I'll be happy to send you 30 days of Rooster Call, which is my morning email. I send this out to kind of tell people what I feel is going on in the overnight, and then what might be some good day trading markets. Okay. The Hit the Mark Trading nightly update, I call trades in advance. You then watch them unfold practicing on paper. Everything I do, we look at price action. We do use a price oscillator, just one. And I believe in market linkage. What does that mean? Well, market linkage is correlation between markets, or whether positive or negative. Today we're going to talk about seasonality forecasting. Now, as difficult as it is for you to grasp and understand, believe it or not, I believe that the big money is trading on calendar dates. Now, you got to appreciate, I am a student of the market for years, right? Decades. I love trading, and I love peeling back the layers to find out what's moving the market. That's my deal. So when I look at seasonality, and what we find with seasonality, and this is really good for position traders, is that we find it is a study of repeating price patterns based on certain dates of the calendar. I know, crazy to believe, but yes, the calendar calls the shots. I do believe this is a great tool for your trading kit. I would never ever suggest you trade seasonality by itself. And by the way, I'm not talking about inter-commodity spreads such as buy corn and sell wheat, or buy soybeans and sell corn. I'm not talking about that. That kind of seasonality is very risky. I'm talking about just straight up looking at your futures, or you can do it on stocks as well. And you look at the calendar and you see these repeating patterns, okay? It's just phenomenal. So, for example, here is the weekly yen, okay? The yen. Let me see if I can find my drawing tool here. Good. Hello, drawing tool. And the blue line says we should go up. The green line says we should go down. So look at all these green lines. It says go down. Yeah, I went down. Go down. Yeah, I went down. Go down. Ooh, big time. Go down. Yes, I went down. Go down. Yes, I went down. Go down. Okay, well, we had the USA election, so we waited until that election rather than just jumping in. But this is a trade, and so one single contract, okay, potential for $11,000. What we did also, some people traded futures, but I also pointed out how you could trade options on an instrument called FXY. If you think the price is going to go down, you sell the calls and you buy the puts, something like that. Guess what? We're in a time coming up where we expect price to go lower again. Now this is this was last January, but we're coming into that same period right now, okay, in October. And yes, I think we're going to go low again. In the perfect world, the yen would pop up before it drops, but absolutely, I think it's going to fall. So, I showed you the remarkable seasonal peaks calling for a price drop year after year. The seasonal valley, I call these peaks and valley. The valley calls the bottom. Okay, well, let's look at this. One moment. This says we should go up. Well, it went up a little bit. Big downtrend, though. This one didn't work. Why? Well, my God, look at the downtrend. This one said we should go up. Yeah, we went up. This one said we should go up. Hey, we went up. Seeing is believing, right? It's incredible. This one just went sideways. Okay, I understand that. Nothing's 100%. Did we go up here? Absolutely, we went up. So what a marvelous tool for position trading. You find through your own technical analysis, I don't care what you look at. I don't care what your method of technical analysis is. You pair the seasonality with that, and if they're going in the right direction, it's like this huge wind fills the sail for your trade. And all it does is it adds a quiet confidence that, hey, I'm going in the direction that this typically runs into. Nothing is 100% in life or trading, but I'm going to show you some more examples, and you're simply not going to believe it. Stock future forex traders can benefit. Absolutely. Now, the question you must be asking yourself is, why does this work? Why don't I have a bunch of indicators, and how come I'm not looking at all kind of lines and blah, blah, blah? Well, because seasonality delves into the other aspect of trading, the psychological aspect. We're talking herd behavior. Herd behavior. And that's what I call the smart money. The smart money is moving these markets because the smart money, unlike retail traders, the smart money keeps the trading extremely simple. It is not rocket science for these folks. It is the retail trader that is trying to complicate everything. Okay? Huge industry, by the way. But the smart money, they use their resources and they are moving the market. And you say, well, why are we all going short? Because we did it last year, because we always do it this year. Okay? And that's the mentality. So I believe that price is a function of the psychology of all participants' belief in the value for a given day. Okay? That forms a price bar. Going further, big money, which I refer to as smart money, moves the market. Smart money is disciplined, keeping the trading extremely simple. Smart money knows the bigger money is following these trends. Smart money will add to working trades, pushing the trend even farther in the intended direction. And by doing the same thing every single year, more often than not, smart money is attracting even more resources, more funds into this direction. Now, one of the greatest seasonals ever known in trading didn't work this year. You buy crude oil in March, and you just forget about it until you get out in July, late June or early July. You get out. It wins like 85% of the time. Well, guess what? This year was the 15% of the time it did not work. What are we going to do next March? Most likely get involved in futures, options on futures, options on energy-related stocks. Absolutely. Now, if you can appreciate, if you can kind of step back and look at the big picture, traders move in herds. The herd is called Wall Street, the Wall Street professionals. These are the people that are vacationing and living in the Hamptons in the summer, right? So these successful traders are moving in herds. Working with seasonality, we see the herd at work, typically moving the markets in the same direction every single year unless extenuating circumstances are at work. And I'm talking about with supply and demand or central bank or political action. I mean, you know, let's face it, if North Korea gets out of hand, we're going to have a bad situation, and I don't care what your seasonality is. Markets are probably going to fall. Central banks, these central banks with all this quantitative easing, the sell signals had a hard time working based on seasonality, but the buy signals were just like unbelievable. Now there are two types of futures, right? You've got your natural commodities such as agricultural products, meats, energies, and then you've got your man-created financial instruments. Now this is your bonds, currencies, interest rates, right? Equity index futures. And I'll throw the forex in there even though it's not a futures instrument. Agricultural futures, and I, you know, I include the meats in this. This is more reliable because we're tied to the seasons of planting, growing, and harvesting. So these are some of your best seasonals. Even the meats, from birth of the cattle or the hogs, raising the cattle and the hogs, taking the animals to the stockyards, this all follows a very nice seasonal cycle. Okay? Extreme weather obviously can affect both, but generally speaking, these same conditions occur every single year. Now, in trading the grain market, if you do this, you know that there's all kind of concern about the weather. And they get worried and, gosh, is it going to rain? Is it not going to rain? But every single year, at some point, the big money comes in and says, we're done with this. I don't care what this threat was on the weather. We're selling. Okay? And they do that because everybody knows that most likely we're having a normal growing season. Farmers then take the product to overwhelm supply. They take the product to market. And every single fall we see the price drop. Okay? It's as regular as rain. Price drops. Let's take a look at corn. Here we go. Here's corn. Hello, corn. Now, the green line tells you we expect price to drop. So we got one signal here. Yes. Another signal here. Yes. And then our last signal is really not going anywhere. Why is that? Not going anywhere because we are so far fallen that we've actually gone 1, 2, 3, 4, 5 weeks we can't move in the corn market. So this market basically it doesn't know what to do. It's called too afraid to buy and too afraid to sell because it's at such low levels. Okay? This is something that we simply expect every single year. What happened here? Okay, here's our seasonal. Well, gosh, it wasn't exact. We got another signal here. I believe you should allow 2 weeks in back and 2 weeks in front. What happened here? Wow, exact. Another signal here. Yes, we went lower. Okay. This says we should go up. Did we go up? Yep. Okay. So on and on and on and on and on we go. Here's one that says we should go up. Did we go up? Well, a little sideways and up, yeah. Did we go up here? Yeah. I'm talking about the calendar. I'm not talking about anything else. I'm not talking about an oscillator. It's just amazing to me. It really is. All right, let's go back to the presentation. People try to complicate the trading. Let's see, here we go. Man-made futures. Central banks are the guardians at the gate. Absolutely. Absolutely. So we still have seasonal tendency in man-made futures, and I showed you the yen, for example. But we also understand that this policy of ultra-loose monetary flooding, right? It's caused a 9+ year running bull market in stocks. Sell signals on equity index futures hardly worked. All the buy signals worked. Okay, but you have to appreciate when these guys at the central banks intervene, obviously they're upsetting what normally tends to occur. All right. Let's look at gold. Remember, herd behavior. Smart money always keeps trading simple. Let's look at gold. Bring forth the gold. Gold, gold, gold. I can look at this 1,000 times, but I always have to hunt for these instruments. Okay. Now, the green line says we should go lower in gold. Well, my gosh, how on earth can we go lower in gold when North Korea is threatening nuclear, bombing Japan to ashes, bombing the U.S.? How can gold go lower with that going on? I'll tell you how. Because there is some very big money, huge money, pushing this thing down, because everyone who is in the herd agrees to do the same thing at the same time. And this, I'm telling you, is what they do. Look over here. What happened here? Down we go. What happened with the blue line, this blue line? The signal's out. Buy gold. Up we go. Now, amazing, isn't it? I think it's amazing. What about the bottom here? You got your blue signals. 1, 2, boom, up we go. So I can go through this over and over and over again, right? It's just unbelievable. Unbelievable. How about bonds? I want to show bonds because the last time I talked about this, someone asked about bonds. Here we go with bonds. Now, bonds are considered a safe haven. You know that. So here we go. The green line says we should go lower. Well, that very next week was when North Korea fired a missile. Smart money undeterred. Smart money presses the bond market, and what do? We see bonds falling as expected. What about down here? The signal is out. Smart money sees the calendar, says buy bonds, March 10, up we go. How do you explain this? Year after year after year after year, more often than not. Now, I know it's hard for you to believe this if you're not a real student of the market for years and do this kind of research, but it's simply incredible. Now, I've created this. There's a lot of people has stuff on seasonality. I'm not the only person. But I am the person to make it in an approachable format cheap, and instead of selling you something every single year, I don't think you need to buy another seasonality report, because all you do is you take the dates that I point out, and every single year you say, okay, well, it looks like the bonds tend to move on whatever it is, whatever week that is in the month. And then you go to your trading calendar, and in advance you write that down. So you don't need to purchase another forecast. There are some services that will have an exact date, and they will say, okay, you buy corn or you buy wheat or whatever on this exact date, and you hold it for 3 days and you get out. Well, I don't believe in that. I don't believe you can pinpoint this to that type of accuracy. And if the trade goes $50, they count it as a win. I don't believe that. I think you got to step back and look at the big picture and say, here is the date. Now, you be prepared 2 weeks before and 2 weeks after that date. And if your technicals add up to this, that says you should be taking a direction which happens to be in the direction of strong seasonality, this gives you a quiet confidence that you're going to see trade follow through. Anything can happen. We know that. We know that nothing's 100%. Now, I send the charts out, and I also attach commentary, a lot of commentary, because I like to write. I love to write about trading. And I send that out in January, the commentary, and August. So what August is, it's an update. And saying, okay, be prepared, here's what we're looking for the second half of the year. So if a person were to buy this report now, you're going to get the August report, the August comments, and the comments that I produce in January. Some people would like monthly guidance. So since I'm just launching this, I'm pricing this dirt cheap until I can see how popular it is. And obviously I want to raise the price. So for 25 bucks a month, payable one time, because I don't want to fool with anything, okay? Payable one time, there will be a monthly report which highlights seasonal expectations and trade ideas for your consideration, okay? And all this is you're basically using me as your observer to say, okay, here's what we expect, and here's a trade recommendation, and then you do your own homework and say, hey, yes, it makes sense, I'll do this. That monthly report, 25 bucks a month times 12 months, is like $25. I will probably change it to where you can buy it monthly, but I'm going to jack the price up because I'd prefer not have to deal with paperwork, and I will reward the people that want to buy a one-time shot. Now, regardless of what you decide or don't decide, the Rooster Call I think is very good, because I even with Rooster Call, I'm trying to teach, and I send this out every morning. The boot camp, we're in the midst of that right now. I do have recordings. It's going to teach you how to position trade using trend and momentum. We've got a trade called a class called Just Day Trade. It's for day trading, super in-depth and in detail, okay? Beyond that, I know you've been here all day. I'm gonna let you give me questions if you have any questions, and that's it. Let me see if there's any questions here. Does this work on forex? Yes, we have a seasonal for forex pairs, absolutely. What instruments do you cover in your report? There's over 25 charts. All the major futures instruments, if you're interested in stocks or something like that, drop me a line and I will send you something on stocks. Let's see here. I'm on a cruise when this is on. Any chance another webinar at this price or maybe recording and I can buy the just drop me a line. Let me put my note in here. Martin at hitthemarktrading.com. Just write me when you get back off your cruise, okay? And just, you know, I will just tell me that you watched this presentation, and no problem. How about indexes? The FTSE 100. I can do the FTSE 100s, absolutely. I did not do it originally. I did the DAX, I did the Stocks 50, I did the Nikkei 225. If anyone wants anything special, absolutely I can do the FTSE 100. Someone asked me for orange juice. Well, I didn't include it, but you know, I sent it out to everybody. So absolutely, if someone wants the FTSE 100, I can do the FTSE 100. No problem. You know, I don't think I did palladium. I did platinum, but not palladium. But if people want palladium, absolutely I can do palladium. So that's not an issue. Okay. Super. Well, listen, I think that we're done here with my questions. And if anyone has anything at all that they would like to discuss with me, you can Martin at hitthemarktrading.com. I'm going to make this brief today. hitthemarktrading.com. I encourage you to check out the website, and that's seasonalityforecast.com. And also, I've got another one, hitthemarktrading.com. But seasonalityforecast.com has a lot of information on it. So that's it. I'm going to run. I'm going to go have a nice exercise at the gym. If you have any questions, please drop me a line. Beyond that, thank you for being here. Don't forget to sign up for the Rooster Call. It's free. Bye-bye now.